Good afternoon, everyone. Welcome to the Financial Literacy Program. So we'll be starting now. I'll be introducing our first speaker. Our first speaker is Ms. Abimbola Komolafe. She's a finance professional with over 30 years experience in various sectors, which include banking, oil, gas, and consulting. She's currently the MD and CEO of Threshold of Trust Nigeria Ltd, a company that provides financial and business advisory service to clients. She's also the executive director and co-founder of Rehoboth Dream Solid Foundation, a foundation that focuses on promoting sustainable education, mentoring, and skill acquisition for the less privileged in order to give them a better footing towards economic empowerment. Ms. Abimbola Komolafe is a certified financial education instructor, a fellow of the Chartered Institute of Bankers of Nigeria, and a fellow of the Institution of Chartered Accountants of Nigeria. She is currently an associate member of Women in Business. She has a big passion to help people achieve financial freedom and grow their wealth. This has led to the creation of the FinanceCoachBK, a platform which uses to educate and offer financial literacy support to help individuals grow their wealth and attain financial freedom. She is married with 3 children. Let's all welcome Ms. Abimbola Komolafe as she takes us on the topic, Introduction to Finance. Good afternoon, ma.
Yeah, thank you so much for the introduction. I'm going to start sharing my screen. Okay. Thank you very much, ladies and gentlemen, for having me join you in your program this year. I thank you for the invitation. I thank your representatives that reached out to me. It's a pleasure to be with you. Can you hear me loud and clear? Just testing.
Yes, we can.
Okay, thank you very much. So it's a pleasure to be part of your program. One, because I'm one who has a passion to help young adults achieve their financial dreams and to empower young adults economically. So I didn't hesitate when I got the invitation. We only had a clash with a program that I had earlier on, and it's a delight that you could, your program didn't have to hold the week I was having my annual workshop for young adults. I think we have about 25 people now around the call. I'm not going to waste your time. I'm sure that you would look back to today and say the 40 minutes that we're spending together will be one that you can always look back to and be grateful that you were a part of. So congratulations to your exco that chose to put this kind of program forward at this time. I was given a topic that says financial health, budgeting, savings, and investing. Well, I tweaked it a bit and I changed the financial health to financial fitness because it makes the conversation smoother and easier. So I'm going to speak to you today on that topic. But before then, I want to encourage everyone around the call to follow me online so I can help you with your financial journey. Like Bemisola said, I have over 30, now it's about 34 years of experience doing this. My background is that I'm a chartered accountant, a chartered banker. I worked for a bank for 10 years, and then I worked for this oil and gas company for 20 years. But I must tell you, when I start speaking with you, you understand that there's a difference between making money and growing wealth and having financial freedom. I congratulate every one of you because it's just about the time. This is the right time to seek financial education, because you can learn from the mistakes that people have made, and you can even make your own mistakes early and then recover quickly. And then you can focus on the future and make sure that you use the advantage of the early knowledge that you have. I mentor quite a lot of people. I mentor even people that are already very comfortable financially, you know, but whose direction in terms of growing their wealth are not, they're not taking the right steps. So I mentor very enlightened people, well-educated people. I understand that we have medical students around the call. And I said I would also thank you all for choosing to study medicine in whatever form, because without you all, we can have all the money in the world and God forbid, we won't have the help with the health. Yeah, so I do mentor people. And the reason I'm giving you this background is so that you understand the need to focus on financial education. If you follow me online, I teach daily. And most importantly, I want to encourage you people to watch the 2022, the recording of the 2022 workshop, that annual workshop that I hold for young adults. I have it on my YouTube, and I had a special guest this year. I don't know how many of you are on the call know Teju Babyface. We call him the King of Talk. And he shared his experience on day one. There are several modules of that workshop. We had 4 days. I encourage every one of you to listen to all the modules because they're very important. You need to listen to Teju so that you can broaden your knowledge, broaden your expectation, broaden how you can achieve this financial freedom that we're talking about. So I'm going to leave it there. I will share these details with your organizers, and I encourage you to follow Finance Coach BK online. I'll be speaking using 4 outlines. I will introduce you to financial fitness and financial freedom. And then I would highlight what I call building blocks for financial fitness. And then I will go to the subject I've been, asked to talk on. I need to give you the background. I need to do number 1 and 2, outlines 1 and 2, so that we can really understand outline 3 very well. And if we have time, I will highlight some of the actions just for you to take, for you to begin to take, just in case you missed picking up things on the way. Now, at the end of the conversation, I want every one of us to understand that there's just one goal for this conversation we're having this afternoon, and it is financial freedom. So whatever I put on the table, just understand that Mrs. Kamalafe this afternoon, once, I don't know how many we are now, we're about 26, the 28 of us around the call to leave this conversation knowing that our goal is to achieve financial freedom. Quickly, what's financial freedom? I always like to put it on the table. That is the status of having enough money or income to pay your living expenses. Your living expenses can be your needs and your wants for the rest of your life without having to be dependent on anyone or any active work or business. I recognize that you are all in the university and you're working to obtain your academic qualification, your different areas of expertise. It's important. I'm not looking down on that. It's very important. But financial freedom means you getting to the place where whatever job you get after the university, that's not what you're going to depend on to meet your living expenses, your needs and your wants. Now, it simply means that you want to get to that stage where you have enough money, enough income working for you. Okay, I said to you that I worked for the bank for 10 years and I worked for the oil and gas company for 20 years. And when I took early retirement in 2017, I got a comfortable payoff. And I'm on a very, very comfortable pension, okay? But making money is not the financial freedom we're talking about. I'm saying you need to get to that place where you have money working for you. And you can decide and say, I'm the chief medical officer of this establishment at this time, but I don't want to work for 2 years. I don't want to work for 3 years. I want to do this, I want to do that. And by the way, ladies and gentlemen, one of the reasons why I want you to watch the recording of the 2022 annual workshop for young adults is because on day 2, I had Dr. Ukoa, who is a consultant, pediatrician based in the United Kingdom. And I brought him to the conversation because I wanted my followers and attendees to listen to him, to how he made his first million in college. The one that he spent with us was wow. So if you don't listen to any of the models, please go to the YouTube and watch and listen to Dr. Okoa on day 2. I'm on a platform with Dr. Okoa, and that WhatsApp platform talks investments. Remember, I say I'm an accountant, I'm a chartered banker, I'm a consultant, I have finance experience. When I see the tweets and the comments that Dr. Okoa is putting in the WhatsApp group, I wonder which of us is an accountant or which of us is an investment expert. What I'm saying to you is that it's very important that in spite of your background, that you work towards getting to that place where money begins to do the work for you. I thank God that in spite of not having so much financial education, because the accounting qualification and certification is not financial education, I thank God for the grace that I have, that in spite of not knowing so much about financial education at the time that I exited working for an employer, I had enough investments working for me. But that's just by chance, which is why I have this campaign. I'm talking to people, as many people as want to listen, that not everybody will be as fortunate as I was, where by chance, I did achieve financial freedom. Now, let me go quickly because I recognize that we don't have much time. So financial freedom means you get to that place where you have enough money working for you. Your money begins to work for you, not you working for money. So for those 10 years in the bank, for the 20 years in the oil and gas company, I was working for money. But I also was fortunate that, on the side, money was working, but money was not working as best as it should work. Okay, so when your money works for you, you earn what we call passive income. Okay, when you work for money, you earn active income, as paid employment, or you're running a big business, you're running around, because owning businesses owning a business and being very active in it does not mean that you have achieved financial freedom. It does not mean that you have passive income. It just means that you're making the business run. So financial freedom is when your passive income, which I have defined as income earned when your money works for you, is achieved when that passive income exceeds all of your financial requirements, your financial needs, now and into the future, your needs and your wants. Okay. The goal is to focus on moving from having more of active income, that's employment income, business income. You're moving from having more of active income into having more of passive income. So if you take anything away today, the first thing you should take away today is that there is passive income and there's active income. You're training right now to be medical consultants and to be medical practitioners to begin to earn active income, because either you start your medical practice or you're employed by someone, you will be doing something. You earn money, you earn big money, if you get good jobs and all of that, but that's active income. We need to move from that to passive income. Now, I explained to you my own experience of making money. I was fortunate, I had good jobs all the time. I worked for people. I was making money, but you see, there's a difference between making money and attaining wealth, okay? When you make money, that's a process where you work. Like I say, you graduate as medical practitioners and you work, you make big money, Some of you will get jobs with Chevron, with Mobil, with MTN, and some of you would, I said I will not bring up Jackpot today. Okay, so you making money is a process where you work for money, but growing your wealth is when money begins to work for you. You earn a fat pay, it does not mean you have financial freedom, it does not mean you have financial fitness. Now, quickly, financial freedom and financial fitness, they work together. If you're not financially fit, you cannot achieve financial freedom. It's impossible to achieve financial freedom if you don't do the right things and have the right money skills and take the right decisions. you will not achieve financial freedom, and you will not grow your wealth. Financial fitness in simple terms means being in control of your money, not your money controlling you, okay? Financially, a person who is constantly in debt has his or her money controlling him or her. Financial fitness means you're in control of your money. You direct your money the way you want your money to go. Financial fitness means your ability to manage your money in order to meet your current and your future needs. By financially fit, it means you having the money skills and the principles, best practices for managing your money. Financial planning, you have the appropriate financial planning skills, your saving skills, budgeting, investing right, tax planning, estate planning. Okay, those are the principles and the skills that you need to have that, to apply to managing your money, and then you can get to the place of financial fitness. Financial health, financial well-being, financial fitness, financial independence, all of them mean the same thing, or rather they work together. So financial fitness means being able to manage your money in order to meet your current and your future needs. When you're financially fit, you are applying the essential money skills to keep you in control of your money, not your money controlling you. When you're in control of your money, like I said earlier, you're able to direct it to work for you to achieve the financial freedom I defined earlier on. And I want to say to you, financial fitness is a life journey. You are very, very fortunate that you have an association that is putting focus on this at this time. Now, two of the people actually, one person that I mentor in the week that we had the workshop for the young adults, she's about 42, 43 years now. And she said to me that she wishes she knew all that she's getting to know now on financial education when she was a youth corper. And another one who has two young children, also sent a text saying that the things that he failed to learn early in life is going to make sure that he teaches his own children early. So congratulations to every one of you around the call. In spite of your, your background, in spite of what you're working to become, you're putting a focus on financial education, which is very, very important, because you need to be in control of your money. You don't want your money controlling you. You don't want to make mistakes. And if you will make mistakes, there will be mistakes that you're making early. There will not be mistakes that will give you too much, big regrets later in life. So like I said, financial fitness and financial freedom, they work together. Without financial fitness, you cannot acquire wealth. And when you have accumulated wealth and have enough money working for you, then you can beat your chest and say, I'm at that place where the money works for me. All you just need to do is to make sure that you continue to keep an eye on the wealth that you have grown. I think I put it on the table earlier on, and I said financial fitness is a life journey that you are starting early. So when you acquire financial freedom, when you have grown your wealth, you're not going to look away. The education you have, you will continue to use to make sure that your wealth is retained. We said this earlier, passive income, when it exceeds your need, then you're at that place where you have financial freedom. Financial freedom is attained by staying financially fit. So quickly, conscious of the time, I want to share with you 3 building blocks for financial fitness that I share with people that I talk to. Can I ask that people mute themselves? Can you mute yourselves, Mr. or Miss Salawu? Thank you so much. Yeah. So the 3 things I want to talk about is being, the first one is that you need to be deliberate and intentional about achieving financial freedom. You need to get financial literacy. You're already doing that, and you need to work with a mentor and a finance coach. Now, in terms of, let me say this before we go on. Tony Robbins is a very well-known businessman and motivational speaker. He's a life coach. He says that if you change nothing, nothing will change. So if we all hear what we're talking about today, this conversation, and we don't make changes, or we don't take action, nothing will change. We'll just remain the same way we were before we came to the program. Deliberate, what you do consciously and intentionally. I say to people, financial freedom will not come to you by chance. You have to do things intentionally. Some of the things we're going to talk about today You're going to have to, learn to take action to get the financial education we're talking about. You're going to learn to take action to, to budget, to save, and then to invest right. You have to do it. You have to pay attention to it. If you need to say, I'll spend an hour a week on my money matters, please set the goal and focus on it. It wasn't, I was just working and working and working, we used to say when I was in the oil and gas company that at the end of the month, we hear a very, very loud alert. Oil companies are working in the oil industry. Nigeria is one of the employers that still pay so well. So you hear a loud alert at the end of every month, but there was no intentionality about investing that money the way it should be invested to give me the best returns. But for you around the call this morning, I'm encouraging you that at every opportunity that you have, pursue financial freedom deliberately, pursue it with intentionality. Irrespective of your circumstances, I'm aware that we all have different backgrounds. We all have different backgrounds. Some of us come from homes where we have silver, golden spoons. Some come from wooden backgrounds where they have wooden spoons. Doesn't matter. Every man, the difference between a poor man and a rich man is how the man or the woman applies his or her opportunities. It doesn't matter your background around the call. If you use the advantage of this program ahead of someone else who has come from a more privileged background, when you meet in front, you're most likely, you may even be better, especially if the person does not have opportunity to have the financial education that you are having this opportunity to have. So you have to be deliberate and intentional about getting financial fitness and financial freedom. Have a financial target, set goals, okay? I know someone that I mentored that said, after 5 years, I'm not gonna work for this bank anymore. I'm gonna work for this bank for 5 years. And after 5 years, I want to own my own business. I want to run my own projects. I want to do this, I want to do that. There's so many goals that you can set. You have short, medium, and mid and long-term goals. If you don't have a goal, if you don't have a goal or a target about where you want to end up, you may not like how and where you end up. So be deliberate and intentional, have financial targets and goals. At this time, this is what I want to have in my account. At this time, this is I don't want to live with my parents, but at this age, I want to be done. And a car is not not necessarily the first asset that you need to acquire. You may say, no, I want to acquire a house first. Okay, you may say, okay, when I graduate, I think for medical practitioners, you also have this, you have to go for your, what's that thing called now? To be consultants, the one that, your specialization. Set goals. You can say between this and that, I want to have a family, I want to do this, I want to do that, and then I want to specialize. I don't know, but you have to set goals, because if you don't set goals, then you will not use your opportunities very well. Okay, yeah, I'm going to talk about financial mentor and coaching and having accountability partners. So it's important that you pay attention to financial fitness and financial freedom. Don't leave anything to chance. And it's never too late, okay? Thank God for you people. I was so delighted. I'm happy to support young people. Take a look at yourself. What did you know about money before this conversation today? What do you know about money? What are your money habits? What are you doing right? What are you doing wrong? And then decide the ones you want to throw out of the window and begin to make better choices one day at a time. And I always say to people, always seek professional help. There are some people that will bill you. Some people are doing this for, some people are doing this for a fee, okay? And there are some people who are mentoring and offering help, for free, okay? And I always say to people that if you are one that goes to a religious setting, you would find out in your religious setting, either in the church or the mosque, that there are professionals that you can tap and say, please, do you have this understanding? I think you have this understanding more than me. Can you help me here? Can you help me there? Now, I also want to say, in addition to the quote by Tony Robbins earlier on, I would like to put this on the table every time I speak to people. If you want to change the fruits, you will first have to change the roots. If you want to change the visible, then that thing, you must first change the invisible. Your choice is when people are not looking. you need to make sure that they are right choices so that the results will be better. The second block for getting financial fitness and financial freedom is that you need to be financially literate. Now, what you're doing today is financial literacy. You're trying to have an understanding. You're trying to have an understanding of the things you need to do to be able to handle your money better. You're working at having what I always call the advantage of financial education. Financial literacy means, you seeking an understanding of money concepts, like financial planning. You talk about budget, savings, investment, tax planning, managing debts. Yes, because it's not all debt that is bad, okay? Debt can even be what will help you to grow wealth if you apply it well. Now, you need to also begin to plan for retirement and just generally being aware and up to date, on money matters and financial things, okay? Most of the young people who are not financially educated find themselves falling into the trap of Ponzi schemes and all of that. And it has to do with being financially literate and being financially educated. Yeah, so how do you get financial literacy? One of it is what you're already doing, I recommend that you sign up for newsletters. If you have online access, if you have a bank, you're registered with a bank in Nigeria today and you have online access, subscribe to the newsletters of the newsletter coming from your bank. Most of the banks that I know now do that. Everybody is paying attention to financial literacy because at the end of the day, people are becoming more aware that, we need to help ourselves. Government is not going to do everything for us. So the banks, I see a lot of activity and, from them. UBA, First Bank, FSDH, Standard Chartered, they all send out newsletters, okay? And it's important. Sometimes we just throw those things away and we don't bother, but there's a lot of information and knowledge you can get from that. And if you are the type that you're looking forward to being an international investor, like Dr. Okoha, that I've asked you all to go and listen to on my YouTube page, Dr. Okoha has investments around the world. He's a medical practitioner like yourselves, like you're hoping to be. If you are an international investor, you need to make sure that you subscribe for newsletters from different geographical locations so that you're up to date on what is happening. You can have investments in Canada and America and sit and listen to only what is happening in Nigeria. Now, I encourage you to also work with a coach. That's another way you can get a financial literacy. Follow as many finance coaches as you can on Instagram, on Facebook, on YouTube. It's free. Attend webinars like this. Don't get tired. Yes, your association has put this on the table for this year. Let's be the beginning. Seek as many as possible. It may cost you data, because you're students, but it's investment that you would not regret. Read good money books, okay? Let not only be about Netflix when you're relaxing. Your relaxation you can eat your cake and have it when you're relaxing. You can read money books. The ones that are very good, Rich Dad, Poor Dad, Psychology of Money, The Richest Man in Babylon. The Richest Man in Babylon is a good one to start with. So yeah, that's how to get financial literacy. Follow good pages online. You see my background, because my attention to financial education came too late, I would say. I'm so eager to gain as much as possible. There's a page online called Nairametrics. I follow them so closely. MoneyWise is a finance coach like myself, okay? But I follow her page because I've got value from her page. As a matter of fact, I joined one of her webinars last year and I paid money. Yes, I paid money to register my 3 sisters and my first daughter, because while I don't take money to coach people, she takes, because she's got dedicated staff to handhold people. And I thought it was worth paying for, because I wanted my daughter and my sisters to pay more attention to financial education. So I paid her. So, but she does have free resources. You can watch Instagram and I think her YouTube as well. Now, the last block about getting financial fitness, remember I said 3. The first is to be deliberate and intentional. And the second one is getting financial education, financial literacy, paying attention to that. The third one is that you must learn to work with a financial mentor and a finance coach. Very important. I tell you, in spite of my background and everything, I have mentors. There are a couple of people, in addition to my husband, that if I need to make an investment, no matter how clear it is to me, I still run it by them. And I will be honest with you, it has saved me a lot of money, a lot of mistakes. So when you work with a financial mentor, the person is sharing with you from his or her experience, okay? And that person can also hold you accountable. Remember, we talked about setting financial targets earlier on. When you have somebody who is your financial mentor, the person you like where the person has gotten to, please make sure you choose a financial mentor that is available. We all would like to have Dangote or $10 as our financial mentor. Let those ones mentors from afar. But look for financial mentors that you can access, that you have access to. Okay, it's very important. And I'm really glad that you're listening to this at this time of your life. So financial mentoring is very key. Working with finance coaches. I was coaching a gentleman who is based in the United Kingdom some time ago. And this guy was, I would say, at the bottom. He had taken so much credit, and he even said that his fiancée left him and all of that. I gradually started explaining to him, so, handhold him. That's what finance coaching is about. Handhold him, day to day. You make a target for the debts you want to pay off and all of that. Do you have a budget? I sent him budget templates. I gave him assignments and all of that. So coaching is more of handholding, helping you to achieve and work to towards your financial targets and your goals. While mentoring, your mentor is just sharing from his or experience, and you can run things by your financial mentor. So yeah, a financial mentor is a trusted guide, a counselor, a person that helps you with your personal finance and your investments. Your financial mentor, if you choose one right, will teach you and guide you from his or her experience, okay? So that you don't make the mistakes that he or she has made. And also the goal, remember we said at the beginning that the goal is financial freedom. So please try and get yourself a finance coach or a financial mentor. I explained earlier on how coaching is done. Now, quickly, will I call it the big masquerade? A real topic that your exco wanted me to talk about, budgeting, savings, and investment. I like to teach principles like this under what I call the ESI model. The ESI model is something that I coined to make it easy for me to teach people. I'm going to talk about budgeting before we go to the ESI model, because the ESI model will just talk about two of the elements that your exco wanted me to talk about. But I'm going to talk about everything so that you do have an understanding. It flows, one flows into the other. So quickly, a budget, so many people find it difficult to budget. And please don't, let me put it on the table before I continue, because when I was talking to some adults last year or so, a gentleman was so frustrated. And he said, budgeting is mirage, it's not good, doesn't achieve anything. And I was trying to explain that sometimes you budget. He was frustrated because he found himself, deviating from his budget a lot. He said he had budgeted at the beginning of the year to buy a car when the exchange rate was at this, and now the exchange rate had moved, and he was just generally frustrated. Now, the point I want to put on the table is that don't get frustrated. Don't get frustrated. Budget does not work the way you want it to work. Can Mr. Joe please mute himself? Mr. Joe Pegwa, can you please mute yourself? Thank you very much. So your budget is a statement of your income and expenses for a specified period of time, okay? It's your finance plan. It allocates money that you're expecting, income that you're expecting, to your expenses, your savings, and sometimes, if you have debt, your debt repayment. Now, I want to put this on the table, okay, before I explain budgeting further. But there are three ways people choose to live. And I'm hoping that at the end of the conversation today, the ladies and gentlemen around the call will choose to live in the third class, people who live beneath their means, because you cannot grow wealth, you cannot achieve financial freedom if you're in any of the upper groups. So people can choose to live by, living beyond their means, spending more than they have. There's so many people like that. We have so many of them on Instagram influencers, living a lie, living above what they are worth. Then some can live within their means. You spend all the money they have, okay? And then some also live they choose to live below what they're worth, below what money they have. People that will grow wealth, that will have financial freedom, will be in this third class. There are people who have money. When you live beneath your means or what you're earning, you have enough money to save, either for to meet your short-term expenses or your long-term goals. Now the question is, how will you choose to live? And I'm saying that one of the takeaway actions from today is for us to say we will live beneath our means. Remember, we're still talking about budgeting. Now, for you to be able to budget appropriately, I recommend what I call the 50-30-20 budgeting rule. Okay, and this rule says when you have identified your income and your expected cash inflow, you will allocate 50% to needs, the necessities, the essentials of life, and then 30% to wants, what I call luxuries. Because if you don't have what you want, it won't kill you. The necessities, they are important. You need it to survive and to be able to survive and to be able to grow your wealth further. Okay. Then 20% for savings, and it's your savings that you will grow into your investments, because you can't take your full salary or your full income and channel it to investments right away. You have to build your savings over time so that you have it for investments. Now, the people who grow wealth faster are able to sacrifice and take, some may not even have, they may have 0% for once. So they take more from, they build up the savings percentage. People that grow wealth faster, people grow wealth faster that way. But it's important, because we have to be realistic. It's important to know that, you would have needs and you will have wants, okay? So please put that on the table. Understand that if you're expecting money from now as students, you're probably getting from your sponsors, your parents, but you do get gifts as well. And some people, in addition to that, also work. I want to believe that so we'll get to it. I want to believe that because you people are Generation Z, you are more educated, you're more technical, you are online, so you know the opportunities for you online. So I'm sure there'll be some of you who are already earning money from working. So whatever source of income you're getting, and please, I have a template and I will send it to anybody who sends me an email. My email is there, financecoachtoday@gmail.com. I will send you the template. Don't say that I'm a student, I don't need, budget template, or I don't need to work with a budget. There's not much time to tell you stories and practical, examples, but so let me just leave it there. But budgeting has saved me a lot in the past. Okay, it's when you budget that you go back and see what you allocated for particular things and say, what's wrong with me? Why did I eat out up to this extent this month? Why did I spend so much money on data this month? What's wrong with me? So budgeting is very important, okay? And I quickly wanted to put on the table the difference between needs and wants. I said it earlier on, what you need for survival, okay? The food, shelter, clothing, and then the wants. The wants are, why you may say you need to be in touch and available for everyone to be reached by, your parents and everything. You can be reached with a Nokia phone that is affordable, but when you begin to look for iPhone and all of that, it becomes wants. I'm just illustrating that's being reachable in terms of mobile phone, if we want to use it to differentiate between needs and wants. But if you don't even have a mobile phone, you will still survive, okay? So there are other examples. If shelter is a need, having a roof over your head is a need. I don't know how many of you play the game Monopoly, okay? If we look at the location of the house, when you now begin to look for house in there, okay, let's use the the one that every one of us we're likely to know, Aso Rock. That's becoming a want. Having a roof over your head in a comfortable place is a need. Food and water, hygiene, you know the difference. You're enlightening people, you're consultants in the making, you know the difference between needs and wants. You must make sure that you don't put too much of your earned income into wants versus needs, because you're not going to build wealth that way. And this is what we call pay forward period. You sacrifice now so that later you can afford to say, oh, I don't want to work anymore. I mean, you people are paying me so much, but I have enough to live, so I don't want to work for you. Let me just move on. And then at some stage in your life, you also want to even start giving back. The earlier you get, to that stage in life faster when you build wealth early and when you achieve financial freedom early. The 36 of us around the call now, some of us will achieve financial freedom ahead of others. Those who achieve financial freedom early will be able to say, oh, it's my give back period and I want to go to philanthropy. Okay, now quickly for budgeting, you need to understand that you need to save money, and that saving money is very key to financial freedom. Budgeting will help you to stay in control of your money. We talked about that earlier on, which is essential for financial freedom, because you allocate the money across the classes of expenses, and you can identify where you're overspending, and you can identify what is putting pressure on your bottom line, okay? With budgeting also, you're a very disciplined person. You can be better. You can say, oh, no, I think I've had a pedicure 3 times this month. I don't think I should have any more, because the percentage I've allocated for comfort, luxury, and all those things I've already reached it. Also, your budget will help you to work towards your financial targets early, because you can tailor your budget across those percentages, as I put it, to achieve the target that you want to achieve early. Now, people that don't budget, if you don't budget, you find yourself overspending. You are likely to get into a debt cycle because you don't even know what you earn and you're spending. And then you lose control. And remember, we say we want to be in control of our money. You lose control. And then you have less money available for savings, which you can channel to investments. And then, of course, you are very far away from the financial freedom that we're talking about. Now, I thank you for your patience around the call, everyone around the call. Let's go quickly now to the ESI model. I recognize that you wanted me to talk about budgeting, saving, and investing. And I said it's easier for me to talk about it using the ESI model. Excuse me, pardon me for sipping water. That's what happens when you have to talk for a long time. Yeah, so the ESI model is what I call earn more, save better, and invest well. If you earn more, if you apply these 3 principles, there's no way you will not be financially fit, and there's no way you will not achieve financial freedom. Now, earn more is very important, because there might be a couple of people around the call who are like me, where I was when I thought, because I had an oil and gas company that was paying me so much that I didn't need to have a side hustle. I don't know exactly the year now, probably 2011, 2012, I don't know when it was. I was still working, and there was an opportunity for me to get a license from Central Bank of Nigeria to run one of their businesses. And my husband, the advert came out in the papers, and he said, oh, Mama, you need to do this, you need to do that. And I'm like, excuse me, financial illiteracy. I was not financially educated. So I thought, oh, I have a good job. I wake up, and for the organization I was working for, we resume at 7 and we close at 4. To get to work at 7 means that you have to be up as early as 5 o'clock. If you want to pray, if you want to prepare, or if you want to exercise, you have to be up early. So I would wake up that early, and I would go, and then I was just so comfortable with the heavy alerts. But I didn't know that it was important to have another source of income. I thank God for the husband that I have, because he put pressure on me, and we eventually got that license. When I left paid employment in 2017, when I took early retirement, in addition to the consulting work that I'm doing now, that business came in very handy, and it's still very handy. So that it's very important to earn more. If you take anything away from here today, in addition to what you've taken away before, because I've been saying take away so many things now, it is that you should not focus on just one source of income. Warren Buffett says, if your salary is your only source of income, you're one step away from poverty. If it was a workshop where we were face to face and we had enough time, we will break ourselves into groups and say, let's discuss it. Let's debate this and let's see if Warren Buffett is right or wrong. I'll leave it with you. Or maybe I should say, can you please put in the chat, if you can type, put in the chat box, let's see your opinion around the call. Do you think Warren Buffett is right? That if your salary is your only source of income, you're one step away from poverty? I'd like to see, yes, he's right, or no, he's wrong. Now, so the two things I talk about when I'm talking about any more is that, like I'm explaining, don't leave university thinking that the medical practice, either paid employment or self-employment that you would be going into should be the only source of income that you should have. I urge you all to please go listen to Teju Babyface again, day one. That's module 2. I spoke first, and then Teju took the second module. Please go and listen to Teju Babyface. Listening to him is just 45 minutes or 1 hour conversation. Will broaden your horizon and your knowledge about how you can earn money. Okay, I don't want to go into that so I don't take too much time. Just go and watch that. But there was something that he put on the table when he spoke, and that is globalization. So please go listen to it. I know you are studying to become medical professionals, but please broaden your horizon. Understand that you can make money from more than one source of income. It may even be that you want to start supplying medical equipment and all of that, but let it not just be, I'm earning money from Mobile, I'm the medical director of Mobile, that's all the money, that is the only source. No, please. We need people to be able to earn money from different streams of income so that we can all, give back to our respective areas of influence, our network, our villages, our homes. The Rehoboth Dream Solid Foundation that I founded with my husband, we send indigent students to school. We have in the past 9 to 10 years, over 10 years now, we have graduates that are doctors, yes. We have lawyers, we have engineers, we have accountants, we have geologists. And that started because we were both pastoring a church where we saw the need. If you don't have financial freedom, if you're not comfortable, you can give back. Let me drop it there. We need more people to be able to give back. And so I need every one of you around the call to think beyond having one source of income. Time is very important. I want you to also understand the time value of money. I don't want you people around the call to finish school and go and take the first job that you get. Make sure that the job, when you're in paid employment, remember we want to move from as much as we can and as early as we can from active income to passive income. Make sure that whatever job you're taking pays you well for your time. It's very important. Okay? I'm not unaware of the things that are happening in the economy in Nigeria. I know that things are tough. I mean, sometimes whenever I have to go to the hospital and I talk to young doctors, I get into conversation with them, maybe because I really want to share this gospel with as many people as possible. Sometimes when I hear what they are paid, I just leave so sorrowful, So we can't rely on just one source of income. And in order for you to be able to earn more, you need to begin to, look at your passion, what interests you. Like I said to you, Dr. Koha is a pediatrician, but he's into investments and you need to listen to his story. There's nothing that man didn't do before he made that his first million. Go and listen to him. Many of you around the call may not know MK Abiola well. I'm sorry, I'm not trying to belittle your knowledge of history, but MK Abiola used to have a campaign manager in those days that they called Gaddafi. And MK Abiola is, was a politician. And that is Gaddafi had an advert that he used to say his business was XX money is not bad money. Now, I'm not going to spell it out, but he was supplying mobile toilets. So the slogan for his business was dash dash money is good money. You can fill in the gaps. So what I'm trying to say is that whatever that you can do legally, and government in Nigeria makes it, the governance that we see around makes it so easy. There's so many services and products that we need to, that the opportunity is to make money, is what I'm trying to say. The opportunity is to make money. Just look around you and say, which service or product can you offer? Okay, and the reason I brought the Gaddafi story on the table is because there's no pride in this thing. There's no pride in this thing. If you're an international traveler and you travel a lot, you would see that outside this country, nobody looks down on anything. It's in Nigeria that, when we enter Mr. Biggs or Chicken Republic, we think that the people that are by the door are inferior to us. No, there's no, I respect, people who are even working with their hands, the laborers, they are the ones that are working more. So please, as I'm encouraging you to have a multiplicity of income, don't look down on anything, on any opportunity to make money, so far is legal. Okay, that's why I brought up the illustration of Gaddafi, who was doing mobile toilets, like 20, 25 years ago. He was the first person also to bring that business into Lagos, and they'll be having parties and he'll bring his mobile toilets there. So it's important to have more than one source of income. We talked about that. And if you're going to have a side hustle, make sure that you have good structure around it, okay? Make sure that you have good structure around it. Make sure that you are in compliance with all the regulatory requirements. During the COVID, some people that I mentor, a gentleman and his wife, the federal government was giving up COVID palliatives to small business owners. So I sent him the link because I am aware that his wife makes this drink they call Zoborodo, and some of the soap, the liquid soap, they were marketing and they were supplying people. And they were entitled to that COVID palliative, but they did not have any evidence of any structure. The business money was going into their personal account. They didn't have anything to show, so they could not apply. All right, I already told you that whatever job you're taking, make sure that you go for the job that pays you best for your time. Now, to savings. The reason why I talked about earning more before, I'm trying to use the ESI model to explain this to you is because we cannot just jump into savings without talking about earning power. And the first thing I'm going to put on the table now about savings is that no matter what you earn, put something away as savings. In short, in this financial freedom thing, there's self-love. Self-love is the first thing. Pay yourself first, okay? It's important if you start working. When you start working, or when you start running your business or whatever, remember that Mrs. Komolafe this day said to you that it's important to have an emergency fund. In Africa, our emergency funds for many people is their relative. Okay, it's only in Africa that a man will, and I'm not unaware of the financial pressure on people. It's only in Africa, in Nigeria here, that a man after 9 months will come and tell you that his wife has delivered, as if he didn't know that there were 9 months, okay, to prepare for it. And I'll put something away for savings. I'll give you an example. I have 3 children. My son is the middle child, and my son is almost 30 now, okay? When he was in England and he was in school, when I hadn't started financial literacy and financial campaign then. Financial education, this campaign. But we were having a conversation and he said to me, if only he put £100 away from his pocket money when he was in England, that's for the 4 years that he was there, that how much money would he have had? At that time, we're having this conversation. I hadn't started teaching people, financial literacy and all of that. We're just having a jovial, conversation. But every time I talk to people, especially young ones, I like to put it on the table that this is what this guy said, though. And it's very important because you see, he could have lived with whatever pocket money we're giving to him, less than £100. And looking back, I even got him to speak to, last year when I had the first annual workshop for young adults, I got him to call in and speak. Tell us with your own mouth, let us hear. That's the same thing for the lady that I said I mentored. I said, oh, I wish I knew what I know now when I was a youth corper. And then the other gentleman that says, oh, anything that I didn't know, my children will know better. So please, ladies and gentlemen, nothing is too small. I have a conversation on my YouTube page that I spoke with an investment guru. And to be honest, I'm still talking to him for myself and my children. And we call this the building blocks to investing right. You need to listen to it. And I have an article on my website, I think, that also talks to the different investment classes. How are we doing for time, please? I forgot about time. Anyway, so whatever you earn, put something away as savings. I try to put that story there for you to understand that you can sacrifice. And when you look back, you would see the advantage of doing that for yourself. Okay? And sometimes we think that we cannot survive with a little bit, percentage less than what we have access to. But we can. We can. During the COVID, many organizations reduced their salaries of people and they survived. So let's leave that there for saving better. And also, in order for you to be able to meet your savings target and save money better, you need to set financial targets. I explained this earlier on. What do you want to achieve? And then you can work it into your budget and say, I'm talking to you for now and I'm talking to you for the future. I recognize that you're students for now, but I'm also talking to you for the future because you can broaden the knowledge of your knowledge from the little things I'm dropping on the table. You can, push yourself to learn more about these things. So in order to save better, you can work your savings targets into your budget. Remember the 50-30-20 rule. Okay. Another thing that can help you save better, apart from budgeting, is tracking your expenses. You can't even know your performance against your budget if you don't track. Okay, I'm sure you people will be saying this woman and her stories. But I have another story to tell you. My youngest daughter, when she was small, then I used to take them out every Sunday after church, working women. We feel very guilty, professionals, so we kind of like spoil our children and say, okay, the money you are making, they are the ones you are not seeing. Try to, give them small out of it. So I used to take them out a lot. And I'm very good with records. I like to keep records so much. I think on this day, I didn't, either I was with them or something, or maybe, I think I was with them. And then we go home and my youngest daughter gave me the receipt from KFC. I said, Mama, take, because you need to file it. I was embarrassed. But when I look back now, I'm kind of like proud. I'm proud of myself. Because it meant that I was tracking everything, tracking all expenses up to the extent that a 6 or 7 year old say, Mama, take KFC receipt because you want to file it. Okay, that may be too extreme, but you need to know where your money went to. If you don't know where your last month's money went to, the likelihood of where the next one will go to is also very low. Okay, quickly. Now invest well. Remember, I'm talking to you about investing, savings, and investing using the ESI model. And the ESI model says earn more, always aspire to earn more, save better. If you're not saving at all, aim to start saving. And if you're saving, make sure that you're saving better, because it's from the savings that your investments would, from the investment savings that your investments will come. Now, financial literacy is very key in terms of investing. I said to you that I don't take investment decisions without talking to some people. You need the knowledge, you need to understand what is happening, the consequences of a choice, of a decision. Then you need to understand your options. Okay, I told you that I have a document, I don't know if it's in part of this slide, of what options are available to you if you're a low-income earner and if you're a high-income earner. I think I have it here. It's also important to diversify. You cannot afford to put all your eggs in the same basket. If you want to go into real estate, you are not going to buy 4 or 5 houses with your gratuity in the same estate. Do you know what developer has done with the foundation? Diversify, spread your money. I always say spread your money to 3 markets. Okay, the money market, the capital market where you buy stocks, the real estate market. See, it's very important to have this on the table. Okay, when you start off from in life, when you start off with your first job, you may not have finances to go into real estate. What you may have access, ask your employers, may have access to mortgages and all of that. Decide, but by the time you start growing your wealth and everything, make sure that your investments are well diversified across these 3 markets. Money market, you're talking of treasury bills, fixed deposits. You're talking about federal government of Nigeria bonds or other company bonds. Capital market, you buy shares. Make sure that you're well spread. Real estate, like I'm saying, if you have the opportunity, make sure it's something to work towards, okay? Now, I'll always put it on the table when we're talking about investments. There's this Japanese proverb that is very important, especially because you people around the call are very young people, that money grows on the tree of patience. The people that I know, and very senior people, some are young, okay? Some are young, some are old, but the people that I have seen that all these Ponzi scheme people have damaged. Let me use the word damaged. There are people who have been too much of a hurry. If banks are paying 10%, tell me, what are these people going to do to say they want to give me 35%? Knowledge is very important, like we said earlier on, but patience is also important. Let's learn to want to grow our wealth. I think the word they use now is organically, not microwave. Okay? One of the advantages you have about financial education so early is that you can go into investments this early. And this early, you can take risks more than I would want to take. I don't want to go and work for anybody again in life. Okay? I want to have the choice not to want to. Okay? And I don't want to go to a place where I take an investment decision that erodes my wealth, erodes my investment base to the extent that I have now to work 8 to 4 job after 35 years, just because I'm in a hurry. But you are at the stage of life where you can take such a risk. And that's why it's good for you to start early. And I'm not saying blind risk. One of the things we don't do is, I think I have the slide here. One of the things we don't do is invest in what we don't understand. Quickly, I'm going to run you through this as an investment guide. There's nothing wrong in investing. I'm even encouraging you to start early. But I'll say to you, shine your eye. That's how to say it. We say, shine your eye. Don't let anybody come and slap your face with stories. If it is not clear, then it is not clear. If something is confusing, it is confusing. Now, I think you have a session on crypto down the road. I'm not an expert in crypto. I don't even know anything except the spelling of crypto. But there are people that understand it. Okay, so if you're going to invest in crypto, make sure that you are knowledgeable about it. So the investment guide I want to put on the table quickly this afternoon, you must have financial targets. We talked about it earlier on. What do you want to achieve? What do you want to get at? Where do you want to get to? What stage and season of life are you in? I said to you, the risk that you would take at this stage of your life is not the same that I would take. What are your financial circumstances? When I was talking to the young ones last year, I put a picture of Rema, R-E-M-A, is a musician, on the table for them to see, because he had tweeted shortly before that workshop that his lineage, that he's the one that will change the financial direction of his family. That the reason why he works so hard is because he comes from a background where he's the one that will break the light into the family. I don't know if you understand what I'm saying. So what I'm saying is that no matter your circumstance, if you're from a rich family, if you have so much money on the table, that will also determine what you want to invest and how you want to invest and the risks that you want to take. If you're also the type like Rema that wants to change the circumstances of your family, you will also be careful and know and take the right decisions as well. So your risk appetite, I said that the young and the old, we talked about diversification. You must never put all your eggs in the same basket. Never. If you don't understand something, make sure that you're investing the money that you can look away from if you lose it. Don't ever follow the crowd. That everybody is buying crypto does not mean I should buy crypto. I'm not buying until I understand it very well. And then we talked about patience. We put the Japanese proverb on the table earlier on, that money grows on the tree of patience. Then professional support, don't ever overlook that, okay? Don't ever overlook that. I told you that I brought Mr. Ayode Jebo. He's a renowned investment professional, to talk to my friends, my finance coach BK friends. I learned a lot from him. I don't, one of the things I learned from him is how to invest in US denominated shares. Okay, so all the platforms and all of that, it's from him. I'm not sitting here saying I'm a chartered accountant, chartered banker. I go to the person that knows it. He's an investment professional, so I go to him. So seek professional support as much as you can. Like I said earlier on, it's not too far from you, okay? Once a lady was, a lady is based in South Africa, and she sent me an email with about 6 or 7 questions. Later, I said to my husband, I said, this girl, she has a project, maybe university, whatever project to do, and she's using me as case study. But I answered her. It was in the peak of the COVID. She had some investment questions and all of that, and money questions. I answered, okay? And I have people, I have friends of Finance Coach BK, people who can help any of you who needs help, okay? So seek professional help. If you want to invest, just if you are not sure of something, ask people. I'm not saying I'm not the god of finance. I mean, small God. But I can direct you to where people that can help you. 2 weeks, last week or 2 weeks ago, I still sent 2 very senior accountants, chartered accountants, okay? Members of my Society of Women Accountants of Nigeria. I sent them to investment houses. And I said to them, this is what you want to do. This is what you should do. This is what you should do. Okay, so seek professional support from wherever you can get it from. Then when you start your investment, make sure you review your portfolio and you monitor the progress of your investment. And if you don't understand, don't invest. That's my mantra. Oyemi, I'm Yoruba, so let me say that. I say, Oyemi, I don't understand it. Okay, I do have this. So quickly, I hope there's a timekeeper because I see that I've gone beyond 40 minutes, but nobody's stopping me. Can you still hear me?
Yes, ma. I did. I sent a private message like 10 minutes ago. About time.
Oh, I'm not monitoring the chat.
Oh, okay.
Oh, 110, kindly round up. So you can take questions, my apologies. Okay, so I'll just stop here then. I do have, I can share the slides with you people. It would be a delight. So this is just a list of, what you can invest in. And then I have this, my popular thing that I put here about Ponzi schemes. I used it before on my Instagram page, but something that will be useful to you to help you to know what to watch to avoid Ponzi scheme failure. Okay, quickly. So you know the actions to take actually. Like we'll drop it. I already told you the actions when I was talking. So I'm happy to take questions and thank you for having me again.
Thank you very much, ma. Okay, we'll be
Thank you so much, ma.
My pleasure.
If we have questions, please use the raise hand button. Let's use the raise hand button if you have any questions, please.
Okay. Somebody's asking for the email.
You can also drop it in the chat box too. Joe Pega, you can speak. Joe Pega,
right, thank you. Yes, I have a question. All right. So basically, there's quite a lot of noise going around on making sure that one's investments are in oneself, especially as a young person, because I've listened to quite a number of people, and then what I've mostly heard them say to us young people is when we make some money, we should invest it in ourselves and trainings. And like they don't really go into us making investments in bonds, stocks, and the likes. So I just want to ask, what would be the best? Is it wise or is it okay can one actually like, is it a must I just focus on myself for now, or start investing also in other assets? I mean, tangible assets here now, talking about real estate and the likes. So that's just my question.
Can I answer?
Yes, ma'am.
Okay, so if I understand you, your question is, should you invest in yourself or should you begin your investment journey?
Right, ma'am. That's exactly what I'm saying.
Oh, okay. By attending this program, you're investing in yourself. By being in the university, working towards your academic qualification for your career, your preferred choice of career is investing in yourself. Now, I'm not sure if the money that you have, I'm not sure if the money that that is being invested in you for the academic qualification is the same one that you want to project for your investment. My answer would be you need to focus on the two, because there is an advantage to investing early. See, for the workshop that I had in August for the young adults, and we had the first one last year, and this year was so beautiful. I had some of my friends, some of my friends sponsor a first prize of some money to the best participant, and then some 20,000 to 5 people. And the 20,000 to 5 people, we made the 5 people open a mutual funds account with investment houses. There is an advantage in starting investment early. I gave you the illustration of my son saying if he had saved £100 per month. Okay, whatever you can put aside, I would encourage you to start your investment journey as early as you can. There is an advantage to starting early. There is something called the power of compounding. Okay, so while you're investing on your character, while you're investing in your academic qualification and trying to become the person who can handle financial freedom well, keep an eye on savings and investing. It's for a reason why that topic was picked as your topic for this season. Okay, so let me put it in another way. If you wait for 10 years to finish your finish, I don't know what level of school you are in now, okay, let's say 6, 7. So you wait till you finish your academic qualification and everything before you begin to focus on investment. And another of your colleagues around the table, the call this afternoon, starts investing with, if it's 500 naira, I can take away, or 1,000 naira I can take away from my pocket money on a weekly basis. That person will be better than the person who starts today will be better than the person who delays. I'm careful to make some pronunciations and confessions because I don't want anybody around this call to be worse off down the road. So I'm not going to use an illustration quoting your name or your person. I hope the answer is clear.
Yes, it is. Thank you very much.
Okay, thank you very much, Ma. We have some questions in the chat box and I'll be reading them out.
Okay.
So someone says, thank you, Ma. Please, what's the best way to save? Because banks, they debit from savings. That's the first question we have. You can answer, Ma.
Banks debit from savings. Just like Nine Mobile is always debiting me for soundtrack or whatever that I never subscribed to. So the best way to save, I would, you can't put your money under your pillow. You still have to use the bank. What I would recommend is pay attention to your financial statements. And indeed, you need to build up small money. The minimum investment, I have it on the slide, I didn't get to it. The minimum investment, some investment houses accept 5,000 naira for mutual funds. And when you give them your 5,000 naira, your 5,000 naira cannot diminish. Okay, nobody will debit your investment account with an investment house for charges, because I think what the banks do, those charges you're talking about, the debits you're talking about are charges. So I would recommend pooling, that is POOLING, pooling your funds until you have enough to channel into maybe Federal Government of Nigeria bonds, which the minimum is 5,000 naira, or you want to buy stocks. You can buy stocks from as little as 10,000 naira. You know, last 2 weeks, I think we had a conversation for older people. And I was talking about retirement planning. I brought a guest to talk about retirement planning. And one of the women that I mentor, she's 75 years old. And I brought her to speak to people. We were about 91 of us on that call. And this mommy said that her dividend income, that's what she's living on. And she's living comfortably. So, but you see, it starts from saving early. That's what I'm trying to say. So it starts from saving early. So if your question is, what's the best way the channel to save? Please pull the money when it is big enough to take out of the bank. If you think the bank is debiting you, then put it into a mutual fund. If it is, if you don't have so much money, put it in a mutual fund, or buy shares or put it in bonds or something. And then about these debits to your account, please print your statement. If you don't have online access, if you have online access, download your statements. And if there's a charge you don't understand, go to your bank. But we must also remember that the banks are giving us services and they need to be paid for their services. So sometimes, the alerts are coming from, charges for maybe some transfers you've done or whatever they've done on your behalf. But if it is illegal, they owe it to you to credit you back. There's a link. I think there's a link. The central bank released a link sometime last year that you can go and complain to, fill forms and all of that. And if a bank is over debiting you, you report them. That's all I have to say on that.
Okay, thank you, Ma. We have 2 more questions, and I'll take them together. The first one says, please, Ma, what is the best place to invest for low income? How do we get information on where to invest? And then the second question says, for someone of our age, what investment options would you say is best available to us? Like in terms of the amount we have and returns we'd be getting.
Okay. I think the 2 questions are similar. I'm going to share the slides that I have. So I have a list of low investment options for low income earners. Because I want you to know how real this thing is, because it's not only the students that are struggling. So I said to you in the conversation earlier on that in spite of the opportunities I've had, that I've not yet invested in offshore shares, and I'm looking into that. The gentleman I said to you that I was talking to said to me, he said, Mrs. K, I don't know, that's a lie. He doesn't call me Mrs. K, he calls me Pastor B, but I didn't want to put it here that I'm a pastor. And he said, Pastor B, download Bamboo. Okay? And I've downloaded the Bamboo. And this conversation, if I go to how far I've been speaking with this gentleman on when I want to start buying foreign shares, it's over a year, but I don't know why I'm just dragging about it. Now, the reason I brought it up is that he said to me, Pastor B, do you know that as low as $100, you can begin these foreign shares that I'm talking about? And the problem is not $100. I'm just not, I'm just too busy doing other things and just pushing it forward. And then, okay, I said to him, I don't want to do it. I want to do it through my son and my daughter. Let them do it. Let them be the one taking all that risk. So I downloaded Bamboo. So now you're asking me, what can you invest in as students, as a young person who doesn't have much money? Sometimes $100 would be what now? 100 times 700 is what? Is that 70,000 naira? So you can't be 7,000. 70,000 naira, yeah. So you can invest in such things. I'm going to share the slide. It's there on the slides. Low income earners, you can buy stock. I said to you, the winners of the FinanceCoachBK 2022 workshop, 5 of them, open accounts for them with Meristem. Permit me to mention Meristem, but Meristem is not the only investment house that can do it for you. And these are young. One of them is in University of Ife. Now they have an account, and I'm saying this is just to encourage you. We're not going to give you airtime or give you phone or give you what you go and use to eat Mr. Biggs. We want you to start your investment journey. So we encourage you, we handhold you. So my PA helped them, and they've opened their accounts with this investment company. And we deposited the 20,000 that they won because we had conditions for them to win. So you can do that. And like the other question said, don't just forget your money in an account where they'll be debiting it for whatever. When it is enough, take it out. There's so many ways you can invest, so many ways. You can buy bonds. You can say that, okay, I'll be buying bonds, 5,000 naira monthly or whatever. If you have that access, there's an advantage in compounding. Down the road, you look back and you say, wow. Instead of saying, I wish I saved 100 pounds monthly, you will look back and say, wow, I actually saved, and this is where I am. You can send me an email. Oh, okay. Sorry, name is Sola. So how do I do that now? Just go to participants and make you host.
Yes, ma. You make Alexander Brown all financial me.
Okay, so make host.